picture first. The bigger picture is a $500 million net tax cut over the next 2 years. And now the upside, the positive side is it's a personal income tax reduction by 23% for all Ohioans who pay personal income tax, and it's an additional incentive for small businesses, pass-through type businesses, up to $2 million gross receipts per year. I mean, that's about the upside. In order to pay for that, we're proposing increasing the sales tax 0.5%. And adding some additional services to that service taxability base. We're also proposing a CAT tax increase from 0.26% to 0.32. What that equates to is $600 per $1 million of gross revenue. That's what it amounts to. The cigarette tax, you heard the discussion about cigarettes here today. It's $1 a pack, and equalizing other tobacco products at the same level.
So it's going to be all the same tax level you said,
at the same level, because right now they're taxed in very different ways, and the disparity is very, very large. So we think we ought to be equal amount. And the idea, as I told this gentleman, was that we want to take away the incentive just to move from one tobacco type to the other. It doesn't really make sense to us. So that's largely it. The other piece is severance tax. On oil and gas, the horizontal fracking process, whatever. We've been trying to do this for several years. We're not getting it through the legislature in the past. We're trying it again. We think that'll be part of the mix. We think that all Ohioans should benefit. I was making a presentation to a Chamber of Commerce last week, and a gentleman asked me about that, and I said, what state or what country doesn't harness its natural resources for the benefit of its citizens? Of course that makes ultimate sense. Everybody, of course that makes sense. So that's what the governor is trying to do with that part of it. Again, not to grow government, but to drive personal income tax rates down so that Ohio can become more economically competitive, create more jobs. We think we've had some success. We think it's working, but we just want to do more.
Sure. And now I know there were some questions about things like competing with businesses out of state, or competing with online businesses. What do you say to maybe business owners who are reading this that have some concerns? Well, I've got an online business that offers the same thing. I think travel agency tourism was mentioned as an example. What do you say to people who are like, I may have to charge an additional tax, that maybe a competitor wouldn't have to charge?
Well, a couple things there. First of all, the issue of crossing state lines to try to get a break in terms of tax, that's something that's been around since the 30s. Sales tax started in 1935. They passed use tax the next year, 1936. Again, I realize the world has changed since then, but the concept is the same. Can people make purchases in different ways to avoid a tax? They really can't, and the reason for that is that is use tax. Use tax was passed in 1936. It means that if you purchase something online and they don't collect sales tax because they're not required to, interstate commerce issues, then you as a consumer still have that obligation. Now, a lot of people don't do it. I realize that, but I think it's a lot of just knowledge. I think people have no idea that they still have a tax obligation. So we are taking steps to bring that more to public's attention. We changed the income tax returns this year. I don't know if you know that, but we put a little box in there, and I actually got this idea from another state, a little box in there that you have to check off that says that you do not owe any sales tax on purchases that you made, cross state lines or whatever it might be. And when you go online, or if you purchase a tax package, the commercially available packages out there, you cannot even file your personal income tax return until you do one of two things: check that box that you don't have any obligation, or put the amount of tax in that line on that form that is, and then pay it. So we think that's going to improve compliance. It's very, very low today. We think that's going to improve compliance. It has to do with travel agencies, has to do with purchasing hard goods across state lines. It might get shipped to your house, all of those kind of things. It's all related to the same general subject, and that is all we're trying to do is try to improve compliance, bring it to people's attention that they still have a tax obligation. The big picture, that's well beyond states, and that's internet sales. That's Congress. That's interstate commerce is controlled by Congress. If Congress ever passes a law, it's called marketplace fairness, then of course you'll be able to, states will be able to impose the tax across state lines. Heretofore, we can't do that, so it's up to voluntary compliance. And there's a number of businesses that do voluntarily collect and remit sales tax, even though they're in other states. There's many businesses do that now. It's a small percentage of the total business community across the country, But some of that is happening now. I think as the awareness it grows, people will take more steps along those lines. Some gentleman just came up to me and with another idea as to how to bring this to people's attention.
Sure.
This is going to continue to grow. The big answer, ultimate answer, would be if Congress would move on what's called marketplace fairness. If they pass that law, then states will be able to impose the tax on them, just like they can you and I,
sure,
if the business is located here in Lima.
Okay. And just a couple last things. Some people, there was kind of a, wasn't really put this way, but well, I might be getting a break on income tax, but then I might be paying more on goods or certain things like that.
Yes.
Is it kind of a sort of robbing Peter to pay Paul? I mean, it's not really a great analogy, but is it something where people might just come out even in the end, or does it look like Ohioans will see really see a benefit, to their bottom line from the tax code?
There's a couple of things to remember, and that is on a consumption-based tax, you as a consumer are making decisions.
Mm-hmm.
It's not being extracted from your paycheck when you have nothing to say about it. You're making a decision. All essentials, food, medicine, prescription drugs, things like that, those are exempt today, and they stay exempt. So we're not touching anything like that. We wouldn't touch anything like that. So you have some options. You want to decide on a service. Mm-hmm. Also remember, too, and I mentioned this in my presentation, is the shift from hard goods to services. Over the decades, we're much more a service-based economy. So doesn't it make sense that the tax code reflect the realities of the current economy?
Right.
That's also part of it as well.
Sure.
We've run a number of scenarios where we look at people at various income levels, 15,000, 30, 40, 50, 100, of all these various levels, and plugged into these models the increase in the sales tax based on behavioral studies and so on, databases, against the income tax reduction. Every single scenario, they end up ahead. Every single scenario, and again, and that's in the aggregate. You as an individual person, somebody asked me recently, well, what if I decide to go buy a washing machine? Okay, that's an individual purchase that maybe you feel you need it. I'm not saying you don't,
right?
But so that's down to the individual person. But on balance, people at all income levels end up ahead.
Sure. And so, assuming all goes as planned, is there a deadline for when these would be implemented, like when the budget is approved then?
Yeah, it would all depend on that, because the budget has to be signed by June 30th, the end of the fiscal year.
Yep.
That we would start to move those things in. The personal income tax reduction would be for 2015, so in effect, would have already taken place.
Right.
It's retroactive back to the first of the year.
Okay.
Sales tax, we would probably make the changes in September, because we need some time to notify the retailers to change the machines and things like that.
Yep.
That has a little bit of a phase-in, but much of it is already in place. On the personal income tax side and on the business side that I talked about, that would go back to January 1st, so you'd be able to take that advantage of that when you file your 15 taxes next spring.
Great. Well, thank you, sir. Really appreciate your time.
Thanks.
Okay, bye.